I am a work in progress, and in this video, I'm going to share with you my income sources and my plan to retire by 35 in Australia. I didn't sugarcoat anything, so prepare for a turbulent ride. As usual, I'll wrap up the video with a portfolio update, and timestamps are in the description box below, so feel free to jump to whichever section that interests you the most. To get the boring stuff out of the way, nope, I'm not a professional. And this video is not financial advice or recommendation to do anything. So if you do need help with investing, make sure you speak to a licensed professional. So without further ado, let's go! I've simplified my plan to retire by 35 in 4 main steps. And the first step is all about building a strong foundation. And that foundational layer is built on why retiring early is important to me, and also how much do I need in my early retirement portfolio to retire early. So let me quickly define what retiring early means to me. Retiring early to me means retiring a version of me that's somewhat shackled by societal expectations.
You need to do this or that in order to be successful and retire.
So in a way, retiring early is my mark to the world that I have accumulated enough resources to live comfortably for the rest of my life, and I did it my way. On top of that, I see it as my responsibility to myself, my loved ones, my family, and the world that I've reached my goals. Since if my dad in one generation can carry us out of poverty, I need to just shut the f up and make every moment count. Retiring early also doesn't mean I'll stop working. I love it way too much to stop. And there are bigger goals later in my life I need to achieve. With how much I need in my portfolio to be financially independent, there are so many different ways to calculate that number. But to help myself get started, I did a very simple back of the napkin calculation by taking the amount that I want to spend per year and multiply that by 25. So for example, if I want to spend $35,000 a year, I would multiply that number by 25 to get $875,000 that I need in my portfolio in order to retire early. Now this calculation is based on the famous 4% rule from the Trinity study. In the study, they looked at different portfolio compositions like 100% stocks, majority stocks with some government bonds, and see whether they can last 30 years without running out of money. I have linked the original study in the description box below, so feel free to help yourself if you're really curious. The caveat to the Trinity study is that they only looked at whether the money will last 30 years. But if I wanted to retire early by 35, my retirement is going to be longer than 30 years. However, I do plan to keep working for lows, so I'm not too concerned about that. For the purpose of this video, I'm not going to comment too much on the 4% rule or the refined ways of calculating a more precise FIRE number. But if you do want me to go through it, make sure you smack the like button, and if this video gets 500 likes, I'll dedicate a full video on that. Going back to the rough calculation example, if I need $875,000 in my early retirement portfolio, with my current investment portfolio of $100,000, that means I need to contribute another $775,000 to my portfolio. And if I want to retire by 35, as of recording this video, I am 28. I'm basically giving myself 7 years to accumulate $775,000. That obviously looked like a massive task, but if I break it down into years, months, I can determine how much I need to earn and how much I need to save in order to get to my goal. And based on the SmartGov compound interest calculator and using a very conservative 6.5% yearly return and my initial deposit of $100,000, I will have to contribute approximately $6,800 per month in order to get to $875,000 early retirement portfolio in about 7 years. I'm getting close to that number after taxes and expenses, but I'm not quite there yet. Allocating capital in the right places have certainly helped me bridge that gap, but I'll talk more about my income sources towards the last component of this video. All of the above forms the foundation to my plan to retire by 35. Yes, it's challenging, but I have one life, so why not? The next part of my plan is to spend less than I make. The less I spend on useless things that's not conducive to my goals, the more money I have to invest. As you know from my previous video, I used to be such a sneaker nerd, and I would spend every single dollar I got paid to buy Jordans or Nike Hyperdunks from Eastbay. Not to mention, when I started working in corporate, I had this weird obsession towards fragrances, And I really think it's my general naivete towards that's how you differentiate yourself. It turns out that depth and clarity of thought along with substance will beat any of that any day of the week. My point is, the younger version of me was not good with money whatsoever. It wasn't until my girlfriend introduced me to the FIRE community and reading Unshakable by Tony Robbins, I realized that it's actually possible to achieve financial independence in your 30s. Then I gradually scrutinized my spending habits because I was trying to invest as much as I possibly can. For example, instead of catching a train at peak hours, I will catch the train at 5 or 6. And since work sponsors my gym membership, I will get my workout in really early and I'll save about $2 per round trip. Of course, because I show up really early and I leave after 7 p.m. to catch my off-peak train, I leverage my commitment to ask management to pay for my phone bills because I use it for work. That's another $100 a month depending on your plan. From there, it's just systematically looking for things to reduce my expenses on. I sold my car and I collected a wardrobe full of black startup t-shirts, which means that I only need a few specialty items in my wardrobe for occasions. But my final hack when it comes to saving money is to get work to continuously pay for training that will 10x my skills. Because by 10xing your skills, the company is improving the output and the productivity by multiple folds without having to hire any additional people. And if you've ever hired people, it's so incredibly draining mentally and financially for the person hiring, the team, just basically for the company as a whole. Now, once I developed a system where I'm not leaking money everywhere, I soon realized that putting money in a high interest savings account that yields 1 to 2% is not exactly helpful. So the third part of my plan was to continuously invest in my financial education to deploy capital efficiently and invest consistently. I won't spend too much time to talk about this since I've talked about this a lot on my channel already. A good place to start would be the Australian low-cost index fund video, and I left the link in the description box below if you are interested. I've also left a list of my favorite investing books in the description box as well, so feel free to help yourself. The final part of my plan, even if I consistently invest, is that I need to invest more. So it became my mission to generate more income in order to invest more. So let me break down my current income sources. Everything that you see is after the taxman have taken their cut. And I'll explain the crossover between my side hustle income and also my client income in just a second. Generally speaking, the client work before I started YouTube is somewhere between 7.7 thousand post-tax per month. And I consult medium-sized businesses about their digital strategy and their execution on SEO, Google, Facebook, or Pinterest ads. Occasionally, I'm also asked to tackle analytics or email infrastructure problems. YouTube ad revenue is about 65 to about 75% of my side hustle income, and the rest is made up of Amazon affiliates, stake, and my loyal Patreon supporters. Thank you so much for helping me to create more content for everyone. After my living expenses, my net income is about 5,000 on average per month, which I invest majority, if not all of it. So let me break down how I reach my income milestones starting from client income. I attribute a big part of how I'm able to justify the amount that the clients are paying me from the really difficult problems I have solved in the past. That's why early in the video, I mentioned that if you do have the opportunity to ask your company to pay for your training that will 10x your skills, take it. When there is a tough problem in the company, especially that it's bottom line related and I have the ability to influence the outcome, I will always put up my hand despite not exactly knowing how I'm going to solve that problem. Because if you can learn fast enough to go figure it out, you realize that there is not a lot of problems that you can't solve in the future. Plus, I leverage these really tough challenges to reach experienced people that I admire, and spending time with them will steepen my learning curve by multiple folds and saving myself from making all of the unnecessary mistakes. By solving tough problems well, that's what speaks the loudest to my clients. And at the end of the day, I'm being paid to solve problems. The tougher the problem, the more I'm going to get paid. But the thing with client work is that I physically only have so many hours to think and consult. To scale my income, I'll need to hire people. I frankly didn't want to create a business with a lot of employees because what's important to me is creating value efficiently for the society, not bragging about how many employees you have. And that's when I started thinking about creating content on YouTube. I wanted to document my journey towards financial independence, or the ups and downs, so that I can share my experience and do it in a way that the community will level up in knowledge. When I started on YouTube, I focused on learning how to make videos by publishing 2 videos a week, and it was my goal to replace my client income at the end of 2020. But I soon realized that to make videos you love to watch every week, it takes time to research and edit these videos. In order to give myself more time to create something that's valuable to you, I slowly offboarded my client work in order to work on YouTube videos. Of course, my income did take a hit, and I moved into a new apartment, so there was a lot of expenses. But over time, my side hustle income did eventually outgrow my client income. It doesn't mean that I'm not going to do any more client work in the future. It just means that right now I'm focusing on refining my skill set as a retail investor and figure out ways to best share that journey with you. I will share more of my YouTube specific learnings in a dedicated video. At the end of the day, I'm incredibly honored to have the opportunity to create content for you. So I will make damn sure that those minutes you spend with me is as fruitful as it possibly can be. Just a quick portfolio update. As of recording this video, my CMC market portfolio side of things is worth about 68,000 Australian dollars, give or take. I haven't made too many changes on this side, but I have made some small minor changes over at stake. With my stake portfolio, it's currently worth about 28,000 US dollars. So that's give or take approximately 38,000 Australian dollars. And I did top up on Apple over the week and also T. Rowe Price. As it stands, I still need to deploy approximately 4,500 US dollars, but the prices are pretty expensive. So I'm watching on the sidelines and I'm observing, and as soon as I know exactly what I'm going to do with my money, I will let you know what I do decide to do with it. In the meantime, I am not sponsored by Stake, but if you do want to try Stake for yourself, I'll leave a link in the description box below. Thank you so much for watching this video all the way to the end. If you have learned something new and you want to support me continue making great content for you, consider supporting this channel via Patreon, and I left the link in the description box below. Nevertheless, remember to gently smash that like button, subscribe to my channel, and click onto the bell so that when I release future videos, you'll be the first one to know. If you are not sick of me yet and are in the mood for additional videos, I have left something on the screen that I think you'll really enjoy. Until next time, my name is David. Otto will always do the honors, and see you very, very soon.